Welcome to the Real Estate Jam session. We've got a great topic for you today. We're going to talk about seeing future real estate trends. So, something that every new investor really needs to know. And for that, I've got Chris Larsen that's going to come on. Chris is a sophisticated real estate investor that's done several asset classes and has had success in each one of them. So, he's also written a book and he has a podcast. I'm going to put those links at the end of the video. Now, if you're new to the channel, my name is Joe Killinger. I've been a real estate entrepreneur for 20 plus years. And I use this platform to bring guests on and we talk about what has worked well for us, what has not worked well, what we failed at. And so it gives you a lot of insight as a real estate investor, what you should be looking out for, what you want to do. So make sure you check it out. DM me if you have any questions. And if you want to, I'd love it if you would subscribe to the channel and make sure you give us a like. All right, Chris, welcome to the Jam session. Thank you for coming on the show today.
Joe, I'm fired up, man. I love talking about this topic.
Yeah, the future trends is something that I think, especially as a new investor, you need to know how to look for what's coming. You know, it's something that can really make you successful. So I think let's just jump right in. So when you're out there, you're looking at future trends. Tell me, what are you looking for? How do you get started? What's your first step?
Yeah, so I'm kind of a freak when it comes to this stuff. I've been living in the future for decades. That's like part of my problem. I've been working personally to be more present in the moment, not constantly think about the future. But I live in Asheville, North Carolina, Joe, as we were chatting before the show here. And the reason we live here is because about 20 years ago, my wife and I sat down and we mapped out options around the country of places to live. Before we did that, I went into the medical device industry, and part of the reason was the demographics. So I'm a demographics guy. And if you're listening and you want to forecast future trends, what you want to do is follow the demographics. I got into med device because of the baby boomers. I moved to the Carolinas because migration trends forecast that in advance. Oh, it's a great place to retire. Well, who's retiring at thousands and thousands a day at this point? Baby boomers. So it's really bolstering the real estate market. So where you want to start, in my opinion, Joe, is with the demographics.
Yeah, I think that's pretty key. I know we always try to look at the numbers for the property itself, and we haven't looked for, we need to know what's going on in the communities too, because if you have the best property right now, but you're starting to see population moving out, you got a problem ahead.
That's right. And again, I'm actually map all this out in my book, which if you want to get it, if you're listening, nextlevelincome.com, you can click on the book link. I'll send you a free copy, but you're exactly right. I talk about it. I think it's chapter 7 in my book, maybe chapter 8. I call it the rising tide. And if you're fighting trends, if you're trying to buy into a population that's leaving, you're going to be trying to swim upstream, or the tide's going out and you're sitting there, and sometimes I like to swim without a bathing suit on. I'd rather the tide stay up,
Now, trying to keep this a family show, but visuals. Yeah, I really think that, if you are, let's say you're a triple net buyer and you buy a fast food product that's in its area that's everybody's gravitating away from, that franchisee or that company is going to have trouble down. They're going to be having trouble down the road.
That's right. Triple net, multifamily, self-storage. You name it. It's all going to be easier if you have a demographic tailwind.
Yeah, I was in Texas last week, so I suppose Texas and Florida and all these states are getting this population moving in.
Amazing.
I was talking to them. I go, what do you guys see as your long-term issues? And of course, they went to traffic. They weren't real estate people. They were construction, investment, Wall Street, tech. But I said, what do you guys see as your future problem? And they went directly to traffic, getting in restaurants, that kind of stuff. And I brought up, I said, well, what about workforce housing? Where are your employees going to be living? And they got kind of this blank look on their face. So I think there's a real opportunity in a lot of these cities. They're seeing this big influx for workforce housing. Now, I know it's going to be kind of hard right now with the cost of goods. I think everybody's focused on luxury because to get the numbers, but I think that's something they need to be looking at down the road.
I agree wholeheartedly, Joe. And, where we started was workforce housing. So we were buying product built in the 70s and 80s, and we were doing pretty heavy value add projects. Where we've moved now to kind of fulfill or to stay in that affordable or workforce housing space are mobile homes. And if you look, at least where we are in the Southeast, it's a great option. You go outside of the big city centers, the metropolitan areas, and it's a very affordable option for people. Some people hear mobile homes or manufactured housing and they kind of turn their noses up. But if you think about it, you need options for affordable housing. These are individuals, these are families that can potentially go from renting to actually owning their home. That's something we facilitate in the mobile home parks that we own. We try to offer the ability for our residents to actually buy. We a lot of times finance the home so they can buy those. And the other thing that you have is you have city planners, you have counties. They're not approving more mobile homes. I think it can be a mistake in a lot of ways. I think we can look at ways to improve the communities like we do. If you focus on that, you can maintain an affordable option, and you can also improve the quality of life for these individuals and these families
Sure.
that are living there. And if you look at the cost, I was looking at some costs last year. So today you can build a unit in most of the markets that we're in for about $150,000 to $200,000 per unit. The average cost in the study I was reading last year was like $300,000 for one unit of quote unquote affordable housing, because it's being managed by a bureaucracy, an inefficient system. So, if you ask me, like, would I rather have the public sector take this on or the private sector? I would encourage policies, in my opinion, that help these affordable options, or like they did here in Asheville. It's actually something I'm a fan of. They did a private public partnership where the city purchased the land, and then they put some incentives in place for the developer to actually provide true affordable housing for the community here.
Yeah, I think labor costs are getting to be to where it's going up and up and up right around the country. That manufacturing housing is something that people could be looking at. It's in the cost of land, and because of time, right? Homes delivered. Now, are you guys putting foundation basements under yours, or are you right on a slab?
We're not usually doing that. No, we're usually just putting them on a slab.
Yeah.
Yep.
I see a couple of people who are actually putting basements underneath, which, it took a while, but then they bring that property in, slap it down, bolt it together, and it's amazing what they're doing. And the time is just, they're bringing houses 3 and 4 at a time in, and they're building a community within a couple of months, so.
Yeah, and then you look at Texas, you look at maybe like, say, Puerto Rico after it got hit by the hurricane. You look at some of the 3D printing and the options that are available with some of the composites or concrete 3D printing models that are out there. Those are kind of this all of the above model, depending on where you're looking. You can put some cool things. Tiny homes, are an interesting option. But I also think that the trend probably can't last forever. In the next through this decade, I think the market's going to have to adjust to some degree.
Well, I mean, I just see this morning that the, SF single family residents, the lease rates just keep going up through the roof.
Yeah.
What are your thoughts on this? Where do you see that going?
Yeah. So I think you have, again, so let's go back to the demographics.
Okay.
You have two groups that are chasing after these homes. Okay. You have baby boomers. They're retiring, they're downsizing, they're moving to areas of the country that have lower taxes, better quality of life. So let's say 30 years ago, you started a family, you worked in the Northeast. Well, now you're retiring, you've been paying these high taxes, and you realize that the state isn't solvent. And you're like, well, I don't know if I want to, suffer through these winters. Your kids have moved on. You want to move to Florida. You want to move to the Carolinas. You want to move to Texas, somewhere where you have milder, year-round climates. I was just talking to my stepfather. He's living in West Virginia right now, and he's talking about moving to Florida because of the climate. Yeah. So you have baby boomers that are retiring, and then you have the second biggest generation, and you could even argue the millennial generation, even though it's spread out over a longer period of time, is as big or bigger than the baby boomers. Guess who's forming households right now? Yeah. Millennials. So they're going after these homes, but the millennials are getting beat out by the baby boomers, because baby boomers can pay all cash in a lot of cases, or they have more buying power. So now you have a force on the upward price, or a upward force on the price of homes, for people buying. And then that means you also have people that are going to continue to rent. So that increases rents. And that's why we're seeing, such great increases in rent. Now, it's also specific to the geographies. So you have some areas of the country where, rental prices, did mediate, or they're lower than the national average. Of course, there's always, some lower than national average, but, some of these markets, like we're talking about, Joe, Southeast Texas, Phoenix, some of the, sweeter spots in, like Idaho, for instance, are raising a lot faster than the national average because of these trends.
Yeah, I think, but you're seeing also Blackstone and all these companies that keep buying these portfolios of single family homes. And
yeah,
I mean, what do you see happening there? Do you see that they're going to end up selling these out down the road, or what do you think is going to happen with that?
They seem to be pretty smart with their with
they
what
really
they've
are.
done in the past. The hottest area right now is build to rent. And when I say build to rent, I mean build to rent homes. So people that are doing that. So I believe that, if you look at real estate, it goes in cycles. Okay. And we can go back to the, mid 1800s, back to, this country, since we've been tracking real estate, since it's like really the country's been developed. And it seems that real estate goes in like 18 to 20 year cycles. Yeah. And, I was introduced to this just because I saw it in my life. Both of my parents worked in the construction industry in the early 90s. There was the savings and loan crisis that hit. I was born in the 70s. I don't remember kind of all the inflation and everything that was going on, stagflation and the Jimmy Carter administration. But I do remember the savings and loan crisis because both my parents lost their jobs.
Oh yeah.
I was then in college and I watched the stock market just rip, and then I saw everything kind of take a tumble there, and the market slowed down. I bought my first property in 1999. So I kind of watched, what was happening with rents in the market and interest rates. And my first property was at a 7% interest rate. And then they came down. We had 9/11. We had kind of this mid-cycle slowdown, as they call it. And then obviously the Great Recession. So I saw, boom, 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 three pieces of the cycle, happen in a period of time when I was very aware of it. And then, here we are, the cycle's repeating itself. I started to follow kind of where we were, and we started buying land and building spec homes, in around 2012, 2013, when banks were finally starting to open up and lend again. Yeah. And lo and behold, here we are. I feel like it's Groundhog Day. I'm about 20 years from when I first started going to real estate investment meetings, and people, back then were not talking about the bubble in housing, but they were talking about how fast rents were rising and how easy it was, and how great rates were. But it can't go on forever. I think it's gonna slow down, and those big players are probably gonna get out when the getting's good.
Well, I think, as a new investor, and I'm sure you agree with me, is you really got to treat this like a business. You've got to be able to look at all the numbers, right? You've got to, and like you're saying, if you go back and just look at historical data, and then look at your current, doing your due diligence, you look at the current data on the community, that's a great place to start.
Absolutely. Absolutely.
I think that's for every investor, that there's plenty of historical data, something that we didn't have when we started, really. We didn't have the internet where you could go back and go. You had some, but, you had the MLS and stuff like that. But, we didn't have all this technology that can really afford you the ability to make an educated decision and look where these trends are going.
Yeah, no, absolutely. And yeah, it's there. I mean, you can look back now and you can see it, and you can access CoStar. So from a macro, perspective, again, look at where we are in the real estate cycle. We're coming into the last part of the cycle. Things are amazing. Interest rates are low, rents are high, but you need to start thinking about what your plan is to build up your war chest, in my opinion, to kind of save for that rainy day. Cause I think this is where you have, call it like a winner's curse, right? Where people think like, I can't lose, I've been doing real estate for 10 years and I can't lose, and you bet bigger, you leverage more. You think, geez, if I'm making 30% returns every year, I'm going to be a billionaire in no time. And that's when you have to, again, focus on the fundamentals. We have pivoted towards higher and higher quality properties,
Okay.
that are more stable, less speculative. And we're also focused on high cash flow sectors as well.
Yeah. What are you, if you don't mind me asking, what kind of returns are you guys looking? Now, do you syndicate or you do it all yourself? Or you
But
have
we
a
do
fund?
both. Yeah, we do both. So in and around like our locally here, my wife and I, we have some stuff that we work on to kind of scratch our creative itch. My wife's an architect. We're working on a local residential development. It's
Okay.
kind of we call it it's a little boutique sustainable development.
Okay, cool.
Where we're focused on the neighborhood, maintaining the characters, the trees, that sort of thing. But then the bulk of what we do are syndications, Joe. So we're doing larger multifamily deals. We just closed on a $109 million deal in Fort Myers, Florida. Most of our properties, we're seeing mid to high single digit cash flow on an annualized basis and, mid-teen overall returns. Obviously, every project is different. Multifamily is the bulk of what we do. We also do self-storage. We have a self-storage fund, and we're actually in the midst of our acquisition of our first car wash site. So we're building a car wash portfolio as well, which is obviously a much more of an operational play. So we built an operating team out around that business model.
Okay.
But car washes, just like McDonald's and Ray Kroc said, sit on real estate.
Yeah.
So we like
Yeah. They
having
sit
cash
on
flow
prime real
businesses on real
estate
estate.
and high
Yeah,
populated areas.
absolutely. Absolutely.
Trust me, we don't have one in the area here in Brentwood anymore. They were all the prime real estate. Now they're all the new development.
Oh yeah. Yeah. It's
Yeah.
wild. And I mentioned mobile home parks as well. So those are kind of
Yeah.
the four sectors that we focus on.
Yeah, I'm a firm believer in, I really think workforce housing is something that a lot of people are going to have to look at. It's just finding an older building and rehabbing it. But
Yeah.
again, doing the demographics. But I think some of these smaller homes, and if you can get two or three of them on a lot, that
Oh yeah.
that's something that works well too.
Yeah. And it's, that's the thing. I think I remember my uncle having a conversation with him about this, kind of years ago when he was building his home. He's like, hey, we've gotten spoiled. Like, we used to share, four of us used to share a bathroom growing up. And it got me thinking, it's amazing. One of the guests on my podcast was talking about co-living. And, geez, Joe, I bought a townhouse. I had 3 bedrooms and I rented 2 of them out to friends.
Yeah.
So, it's there can be bridges. I think if you're listening, if you're a younger investor and you're like, man, how do I buy my first property? Buying a property where you can convert part of the property into a short-term rental. Like we built an Airbnb into the first floor of our property here in Asheville, which means we have a place for our family to stay when they come and visit. But tonight, somebody's staying down there and they're putting money in our pocket. So it's a nice little side business. So being creative like that, not only at a policy level, like we talked about earlier, but also at a personal level and saying, hey, like I can educate myself on how to incorporate this business can really afford you a much greater buying power.
Yeah, I agree. I just think we need to, people want to invest in real estate, but they need to understand that it is a business first and foremost.
It is a business.
There
Everything
is
we've
data.
talked about is a business.
Yeah,
absolutely.
There is data for you to make, historical data. And, you need to look at these demographics and understand them and make sure there is population moving in, because there are some areas that you're seeing that it's slow, but people are gradually moving out. So I think it's very key. All right. Well, I know you're busy and we're getting kind of long in the tooth here, but give me a couple of your favorite tips for seeing future trends. What else you got?
Yeah. So first off, check out our blog. I just put a blog up here that talks right through this process, nextlevelincome.com. You can check that out. Number one, here's a shortcut, United Van Lines moving survey. If you're trying to figure out where in the country you should invest, just look at where people are moving. Number two, again, look around, focus on the areas from a local perspective, go on your city's website. They'll tell you where they're going to devote resources and infrastructure. They usually have like a vision plan. Asheville's putting together theirs for the next 20 years. Your city probably has something very similar, and you can look and figure out where the master plan is. That's how we've been successful here in Asheville. We've just followed where the city is putting their resources every 5 years, and we've been able to hit the hot neighborhoods one after another. And then finally, find a good professional, find a mentor, find a coach that has been doing this and can assist you. Don't make the same mistakes I did. If you can not make those mistakes by learning from them. And that's why I wrote my book. I want people to take a shortcut don't spend 15 years making my mistakes. You know, Joe, you know the same thing.
Yep. I went through them. I look back now, I'm like, it was just so, and back when I started, there really wasn't mentoring going on. So, but I learned from them, and now we're doing mentoring as much as we can. So, well, Chris, thank you for coming on the show today. I am going to put if you can send me the link to your book and to your podcast, I'm going to post it up. It'll be on the video below. And, but thank you for coming on today.
Absolutely. Joe, it's been my pleasure. Great to see you from across the country here today.
You bet. And for those of you watching, make sure if you haven't done, you go on and like this video. And if you haven't done that, you need to subscribe, please. So check it out and DM with any questions.